Welcome Forex traders to this video brought to you by Admiral Markets, where we take a look at the Forex market on the 24th of November. This is the weekly overview with the euro dollar, pound dollar, dollar yen, and Aussie. Before we take a look at those pairs though, please be aware that this video is for a global audience. It may not be suitable for everyone. To get the info on that and other details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and global financial markets and products are considered high risk and it may not be suitable for all traders and investors. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and you can request the disclaimer by contacting your appropriate entity at admiralmarketsglobal.com. This week we have, of course, a great lineup coming up. Instead of the usual Pro Learning Lab on Thursday, though, please be aware that it's on Tuesday at the same time, 6 p.m. Central European Time, 5 p.m. GMT time. Best methods on stop losses, so I highly recommend that. And the usual, of course, recap tonight. Today on Monday, then expert advice on Wednesday. Tuesday and Wednesday we have live trading sessions in the morning, 7:45 a.m. GMT time. First pair on the list, euro dollar, after of course the break of the rising wedge, these magenta lines at the top of the chart. We have seen an enormous fall to the downside, and last week was yet again a bearish candle in that enormous momentum, bearish momentum. Last week we had a wick here at top. We ended very close to the low of that candle, so I would expect a follow through this week to the downside. I would expect a negative bearish candle yet again on the euro dollar, as we've had many of those, in fact, in this last 6 months. So expecting downside, and would not really consider anything different as long as we stay below last week's high at 126. Now zooming into the daily chart, if we have that 126 in mind as a critical level, you can see here that price was kind of making a bear flag in a way, just oscillating slightly to the upside here, slowly but surely, but then boom, Friday, a big down day. So expecting at max a pullback here, and then as a pullback, bumping it back into resistance for downside. So if we then zoom into the 4-hour chart, one thing that I would like to do is put a fib. Not this fib, this was the previous fib where we stopped at the 50 fib and then moved down. But I wouldn't mind putting a fib on this swing high, swing low. And looking for shorts at the 38.2 or the 50 fib. Roughly in that zone is where I'm looking to potentially short it if price indeed shows signs of weakness. Perhaps even the 61.8 as I would expect the highest fib for price to get to. So anywhere in that zone, if I see some confirmation candlestick patterns, some price action signals that price is stopping there, that's what I'm looking for as a potential shorting zone for price to fall basically down to this 122, 122.50 zone at first. Now it could go lower, but that's the the primary target for the moment. When zooming into a higher time frame on the monthly, you can see that that zone is still a zone that could be a buying zone, could be a bouncing zone because of this trend line. There's been, of course, 3 hits on this trend line. It's a big monthly trend line at around 121.70-ish now. So that's something to be cautious of as price gets close to that bottom of the monthly wedge. The Australian dollar definitely on this weekly chart in a downtrend as well, looking at the fact that price is just steadily but surely always moving lower, of course, with lower lows and lower highs. Now the break here of the green line is not happening that smoothly. If we zoom in, you can see that we've had 2 bearish candles with wicks, 1 bullish candle, so it's not that enthusiastic of a break as yet. However, despite the wick at the bottom, it's still a bearish candle, so obviously I will keep an eye on last week's high, which is important level for the bears and bulls, in fact. If price does not break through that high, then this could be a break of a bear flag too, just like the euro dollar, and this could be the hook back break right there and the hook back right now. Friday was a shooting star with a bit of a wick on the top. So if we zoom into the 4-hour chart, putting a fib from that swing high to the breakout swing low, we see the price stopped at the 61.8. I wouldn't be surprised if this is already the turning spot for the Aussie to fall down to minus 618, target at 84 at first, and perhaps lower. But that would be the conservative target in my view. How I look at the charts, that's what I see at the moment, that this could be the turning spot. Now obviously it could be good to keep an eye on, for instance, the magenta line here. It's a support line. If price breaks through the green and the support line, right there, there's of course more confirmation that price is back into that bearish mode. Pound dollar had a doji week last week, just a very small candle. In fact, inside candle compared to the weekly candle of 2 weeks ago. All in all, this is of course, a tremendous bearish momentum, just like the euro dollar as well, and therefore remains bearish territory as long as we keep having actually bearish weekly candles. I see no reason to change that view or analysis. And looking at the daily, you can see a recent fall. This is maybe just a small pullback or sideways zone consolidation. So if we look at the 4-hour chart here, you can see that that's just a sideways move. I wouldn't expect price to go above the 50. If it does, I'm cautious with the bearish side. If price stays below the 50 fib, I'm bearish on the pound dollar and looking for good entry spots to the downside. One of those could be a break of this triangle like that, bearish contracting triangle. So this could be a fall and then a triangle, and usually speaking, then we get a fall and continuation of that triangle. That's what I'm expecting. So either a short again here or at the 50 fib or upon the break of the triangle is something that I'm looking for to trade on the pound as well, in fact. Then last but not least, the dollar yen. Here too, dollar bullishness, in fact, where we're having a bullish candle yet again last week. As I've been saying already for quite a while, if you have an uptrend like this, all you have to really do is keep an eye on the weekly candle, and you can see every week, week by week, we have bullish candles. Now, last week had a bit of a wick, that is true. And it's not surprising because we've already traveled up so many pips, 1,300 I think here on the dollar yen within a couple of weeks, which is an enormous amount. We are also approaching the 120 resistance level and psychological round number. We have, let me check, I think we have some divergence between the 4-hour tops here as well. So, this is logical that you're going to get some struggle at one point or another. Could there be one more upside? I do think so. I wouldn't be surprised if price pushes really up to that 120. We last week reached the 119 level. I'm still wouldn't be surprised to see price push up very close to the 120 and then make a bigger consolidation at that point. The invalidation level for me is this 117. If price pushes through 117, it's breaking through this uptrend channel indicated by magenta and breaking through basically bottoms and broken tops, which should become support. And then I wouldn't say it's bearish territory, but it's more neutral area and not necessarily bullish right away, or not bullish, doesn't remain bullish, let me say it this way. So 117 is kind of the last level I would expect price to bounce off, and if it doesn't, it's not as bullish territory as I would expect. If it stays above 117, I'm looking for price to continue from here up to close to 120, in fact, and see if it can make one more rally before we get a bigger consolidation. So that wraps up today's analysis. Make sure to follow Admiral Markets in the social media, and above all, make sure to join and check out our webinars this week. It's going to be an awesome lineup. So hope to see you then. Wish you all good trading though, and see you all very soon. Cheers.